Hey guys, in this video I'm going to show you what the trade signals look like on the Euro-Swiss big candle robot, and then I'm going to explain how the cumulative wins money management system works and why it's so powerful with this robot. So let me go ahead and run a back test here so I can show you the trade signals. This is starting in March of 2020 during the whole coronavirus stock market crash and all the volatility that went on during that. So we got a lot of trades. There's a double sell here. Both took profit. There's a cluster of buys. Looks like they all won here. Now, when volatility is low, you don't get any signals. The candles just don't get big enough. And then when volatility picks up, you start getting a lot of signals again. There's 4 wins in a row. Let me clean this up. Here's 2 hedge trades. 1 won, 1 lost. See, they tend to take some losses during trends, but they're not too bad. Sometimes they win a little, sometimes they lose a little. Here's a cluster of buys and sells overlapping. Now sometimes you'll get a signal in the direction of the candle like we have right here. And it's just doubling down on a move that's going the right way. Now we're in July of 2020. And here we are, July 14th. We had a nice whipsaw here with a sell followed by a buy, and they both made about the same amount of pips. So now I'm going to go through a 5-year back test, and I'm going to explain the money management system, okay? I'm going to stop it right there. Here you can see we've reached our first cycle target at 20 units. We're using a unit size of 0.01 lot. So following a qualified win, it increases by 0.01. And following a qualified loss, it decreases by 0.01. So here we have some losses. You can see the lot size is coming down. Following wins, it goes up, losses coming down. So you keep stacking on positions as your wins accumulate. And here we started with $1,000. You could start this with as little as $250 at a non-US broker that has 100 to 1 leverage or more. But for this test, I'm starting it with 1,000, and it went up to $1,846. So our cycle starts here at the very beginning at 0.01 lot. And our biggest concern is the cycle drawdown, because that determines our risk, okay? So what is our cycle drawdown? Our cycle drawdown is any dip below the starting equity of our cycle. So here it drops down, and let me check to see where that is. $939, so we're down about $61 from the $1,000 starting point right here. Okay, so for a $61 drawdown into your starting equity, you were able to achieve $864, I believe. Let's see. $864 profit right here. Okay. And you could have started this cycle with $200. So what marks the end of our cycle? A win at your 20 unit target. Okay, and this is not a bad return for your $61 dip into your equity here. Okay, so let's go on to the next cycle. I have to start this all over, but it goes fast. And there's our cycle target. Okay, so the first cycle made $845. The second cycle made $698. Now, here's the thing. Most people are concerned about these big drawdowns here. All right, this is about a $200 drawdown, and this is using 0.01 unit size. So we have not increased our unit sizes yet. This is a $200 drawdown, and this is peak to valley. So this is what most people look at, and they say, oh, you have a $200 drawdown. That's, how can you start with $245 when you have a $200 drawdown? Well, that $200 drawdown is profit that we're just giving back to the broker for the sake of making more money. It's our only dip into our $250 starting equity that could have been $250. It was only $29, right? So I'd gladly take a $200 drawdown when I can make $700, $800 per cycle on a $250 beginning balance. You see what I'm saying here? So it's using your profits to leverage yourself to make more money. And in the beginning, when the lots are small, if you have a bad run, well, the lots stay small, so you don't lose too much. Okay, so let's do one more and see where it takes us. One cycle. It's 2 cycles. This one took a little bit more of a dip. When things go well, they go really well. So here's our third cycle target right there. Let's stop. Okay, here we are. Let's check out our third cycle here, how it went. The starting point was right here, and it went until our cycle target was hit right about here. And you can see where the end of it is right here. That's our cycle target at the top there. Now let's see how far this dipped into our potential equity. We had a 25.43 balance there with a low of 24.49. It's a $94 dip into the starting equity of that cycle. And now let's see how much it made. So we have this is 0.01, 3447 minus 25.43. $904 this cycle made. Okay, for a potential dip of $94 into your cycle beginning balance, you end up with $904 profit. If you had started that cycle with $250, that's a 361% return on your initial balance. Now, if you were compounding between cycles, well, then you would increase your unit size up to your new balance at each cycle target. And that's when you really get some serious compounding. Okay, let's see what happens when we compound profits between cycles. Say you start with a 250 beginning balance. After your first cycle, you're up $845 profit. That's a 338% return. The second cycle, assuming you started with $250, returns $698 profit. That's a 279% return. And again, on the third cycle, assuming you start with $250, it made $904 for a 361% return. Now your worst drawdown into your beginning principal on all three of these was $94. Now let's look at how these percentages compound between cycles. Okay, so here we go. Cycle 1, starting with $250, 338% return puts you at $1,095. Cycle 2, assuming you start with $1,095, 279% return puts you at $4,150. If you start the third cycle at $4,150, that would return 361% for a total of $19,131. So you can see how this can snowball really quick when you're compounding between cycles. You just have to have the patience to wait for these 20-unit cycle targets to hit. And you cannot over leverage. This is based on a $250 allocation per 0.01 unit size. And you should really have 100-to-1 leverage or more to do this at a broker that allows hedging. For US brokers, you want to allocate probably at least $350, $400 per 0.01 unit. And use the preset files that don't hedge. Okay, so I'm going to run a whole 5.5-year back test. And let's look at how this turns out. There's one cycle. Two cycles. Now remember, if you were to compound profits between these cycles, how much it snowballs. On the third cycle, we were at $19,000. But MT4 cannot compound between cycles. It just doesn't have that ability. I tried programming that and it just wouldn't come out right. I've had a lot of people try to automate that and it just doesn't work. So once or twice a year, you're going to have to manually adjust your lot sizes if you want to compound between cycles. So there's the fourth cycle. That was a nice run there. Okay, we're coming up on a fifth cycle target here. Now here's a big drawdown, you see, but it's way, way in profit from the starting point of this cycle. So while it may look scary, it's all just profit you're giving back to the broker temporarily. Okay, we just hit another cycle target. And we're about to hit another cycle target here. That's a good run. How would you like to go through one of those runs with high lot sizes? You probably wouldn't be able to sleep. Okay, I'm going to pause it again here. Okay, we're coming up on our 8th cycle target. That's a beautiful cycle there. Hardly any losses. Straight up. Okay, we're coming up on our 9th cycle target here. It's going through a little drawdown. Let's see what happens. Almost there. We need a win at 20 units, and it looks like it hit. Yep, drop back down to 1 unit. Okay, we've completed the 5.5-year back test, and we've just about completed 10 cycle targets for a total profit of $7,763. That means the average cycle returned about $776. So let's look at each cycle on a chart here. Here you can see the maximum cycle drawdowns on each cycle, assuming you started each cycle with a 0.01 unit size. Again, this The strategy tester does not compound profits between cycles. You would need to do that manually by changing the lot sizes after each 20-unit cycle target is reached. So there's about 10 cycles over 5.5 years. It's about once every 6 to 7 months. So it's not a lot of work involved if you want to make some good money. So here we can see the average profit on every cycle is pretty consistent, except we have two $500 something targets in the middle here when things weren't going so well. But on average, $770 a target. And I already showed you how these returns can compound between cycles. So get your calculator, do the math, just like I did. I think it was in this one here. And just continue that on up and through the 10th cycle, which is just about completed. It's almost there, a couple more wins. And that's it. If you want to get this trading robot, go to roulettetrader.com.